Okay, folks, if you look at the Aussie CAD pair, we've looked at this in quite some detail technically. We've got a fundamental bias looking for some of those extreme Australian dollar short positions to unwind. We're looking at the WTI, the copper WTI spread. You can just see that copper is sort of doing a little bit better than WTI, particularly with WTI's 5% fall yesterday. So all of this is just pointing to more Aussie CAD upside. Great, and remember the inflation differentials between Canada and Australia are quite marked. From the top of my head, Australian core inflation, I think it's about 5.9%, and it's about sort of three something in Canada. So it's nearly double core inflationary prints from Australia versus Canada. So that should keep pressure on the RBA to be more likely to hike rates. So all of this has just been supporting Aussie CAD upside. Pick up in activity in China and Q4 expected to be stronger. So I'm not going to go through that all again. I want to really point out a technical tip. Look, we've seen the break of this trend line to the upside. We've seen a retest, a sort of false break of that trend line now moving higher. That's very bullish, confirming that bullish outlook. Now, we also noticed on the weekly chart this very strong bullish hammer reversal bar, body close within the body of the previous candle, the tail 2 to 3 lengths, the 2 to 3 times the length of the body. It's a bullish close. There's space to the left. And more importantly, do you see that area there? This was sellers trying to take it to fresh lows and they weren't able to. So you get a bit of short covering, you get sellers capitulating, you get a bit of profit taking, all of which just naturally makes, these tops and bottoms areas where you see reversals. So fundamentally, technically, it's got a lovely bias, and we saw that very strong seasonal bias for the Aussie CAD upside. We looked at that yesterday. There's also, strong seasonal gains for the Aussie CAD, and a lot of that has to do with the seasonal weakness that we have for oil. So, all the stars are aligning. But I want to point out a technical tip for you to look for. Now, two things. So first of all, a technical entry would be from the break of the nose of that 0.742 region. So this is value entering the market now because we've seen a break of the nose, and you can see that stops can be placed underneath that tail, right? Now, what I want to share with you is this: I'll show you another. Once you see, if you look at that, you see that the height of that candle, it's 163 points. Now, what I've noticed is when you see the market move an extension higher of the entire range of that candle, right? If and when that happens, so look out for this in the coming weeks. Once we get to that point there, right, then this area here becomes a real sort of breakout retest zone. That particular nose of the candle. So it's somewhat of a niche point, right? But you will see how much this happens, right? Especially when you've got the fundamentals in your hand. So that becomes like a mini. That's kind of a mini breakout level, right? And you can see that here. Look, support, a little bit of resistance. It's messy, right? It's a messy level, but basically you can see that is a key level. So once and if this level breaks and we get an extension up to of 163 points from here, then that becomes a low risk, high reward area. So it means you could have an entry there, and crucially, you wouldn't need to have your stop all the way down there. You could have your stop like just around 8,680, and that's fine, because what you tend to get is that if price extends up for the week afterwards, so this would only be valid for 1 week afterwards. So if you look for an extension of the pattern, and then for that next week, once you've had a full extension for that next week, if you got to move down there, typically, okay, the bounce it's like a touch and go move. It's like that. So it means stops can be super, super tight. So it's quite a nice way of being able to really sort of limit your risk. So I'm just seeing if I can show you an example of that sort of happening here in the chart. But it's those of you who've been trading for some time, you'll kind of intuitively get this, that really what that becomes is kind of like an intraday range and an obvious intraday turning point. So, that kind of area. It's a little technical tip, something worth looking out for, particularly when you're wanting to get into a market. We've got a bias for this Aussie CAD upside, a lot going for it. Arno brought it to our attention. Fantastic trade and technically looking lovely. So there's nothing not to like about this um, at all, as long as we don't see, a huge capitulation in the copper market or a huge crash in the Chinese equity market, or a very dovish RBA. Apart from that, it's perfect. Okay, joking aside, but with all those, a lot of those risks have been ongoing for some time, and we're really getting to an extent where the data has been so bad for so long that the Aussie shorts have been building for so long that we're kind of feeling very stretched positioning, and you can see that here with the support level. We've kind of been confirming that.